Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock, with news of sharply lower retail demand worldwide. First up today, however, the overnight dairy auction brought little change in overall prices, with the index down just 0.8%. But the key whole milk powder and skim milk powder prices both rose 0.1%. It was prices for butter and cheese that took the index lower. In the US, the latest update of the Johnson Red Book for weekly retail sales puts them down almost 9% on a year-on-year basis and almost 13% on a month-on-month basis. Given that the retail industry in the US was worth $6.3 trillion annually at its latest reading, that fall is equivalent to at least a $750 billion and probably falling reduction. A reduction in demand of that size is a world-scale event. These falls come as consumer debt levels reach record levels. The retail trail is a big part of their giant services sector, and that result is backed up and more by the latest services PMIs for the US. Both the internationally benchmarked Market One and the more widely watched local ISM One recorded record falls, far below what was seen in GFC. These results end in almost 10 years of continuous expansion in this sector. Their service sector may be contracting, but the full US trade deficit is widening again as exports fall more than imports. US exports to China fell 15%, essentially making the US-China trade deal a failure. US imports from China hardly changed. The situation is dire for US federal government finances. It says it needs to raise $3 trillion in the current quarter by selling bonds. It is a level that will likely overwhelm markets and can only be achieved by the US Fed being a major buyer with QE money. And in the third quarter, it indicated it will need to borrow at least another $677 billion. It borrowed $500 billion in the first quarter. By any measure, this is panic borrowing. Already US federal debt exceeds $23 trillion, and they're probably now only just getting started. Retail sales data is out for other jurisdictions. In Hong Kong, they recorded an eye-watering 42% decline year-on-year, and that was only for the March year. And Singapore has recorded a 13% drop on the same basis, and also only for March. Both are more evidence that consumer demand is collapsing worldwide. In Europe, the German Constitutional Court has ruled the Bundesbank is to halt participation in the ECB's bond buying programs unless it can show the policy is proportionate. But the ECB is unbowed by the decision. In Australia, the RBA left all its policy positions unchanged in its regular monthly rate review, but it did hint that when recovery comes, it could be stronger than others assume. The US Treasury 10-year yield was little changed in opening trade in New York at just over 0.65%, and gold is also unchanged today at $1,707 an ounce. US oil prices, however, are up sharply today. In the US, they're currently at just on $24.50 a barrel, a rise of $4.50, but it'll need to be above $30 before any domestic fracking resumes. International oil prices are just on $31 a barrel. And the Kiwi dollar is marginally firmer overnight. It is now at 60.6 US cents. On the cross rates, we're still about 94 Australian cents. And against the euro, we're up again, today by more than half a cent to 55.9 euro cents. That means the trade weight index is a little bit firmer than 66.6. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.